Well, the Reserve Bank of India today talked once again about easing priority sector lending. It's great news for startups because they've decided to ease priority sector lending to startups as well for loans up to 50 crore rupees. With that, I'm going to invite my next guest. It is Alok Mittal of Indifi. Why did we choose Alok? Because Indifi and TiE-Delhi NCR actually tied up during the beginning of the lockdown to help out startups. This was being done in the form of growth debt capital to those startups that had recurring income. More than 50 startups did avail of this. And Mr. Mittal, it's always a pleasure talking to you. Thanks so much for being here on Startup Central. Was it very, very cumbersome lending to startups? You have the RBI today saying they're going to ease guidelines, make it easier and quicker for startups to tap this option.
So, like other segments that we do, Nayantara, startups need to be looked at differently. So, most of these startups are not profitable companies, and to that extent, the underwriting norms and how you view a startup's financials needs to be different from how you view a stable state business. Since we decided to get into this space, we have built those models that allow us to assess a startup differently. And what today's RBI's announcement does, it starts to give banks an incentive to go and finance startups through debt capital. So I think this is a great development. At a signaling level, it does clearly put startups as part of the core policy emphasis as far as the government is concerned earlier and now with RBI. But even in real terms, especially with small finance banks, a significant part of their priority sector obligations can be covered through debt capital to startups.
The question I want to ask you is that, debt is expensive. For a startup that's looking to extend its cash runway, perhaps just survive at a time, reimagining it all, the business model, is debt even a good option, or is still maybe equity a better option simply because you get at least mentorship and all of that?
Yeah, so I think the debt and equity are financing structures for two different kinds of investments. So we don't think of debt as competing with equity. Startups will still raise equity financing. They will get the mentorship. And those investments are best utilized to create the infrastructure for growth. Where the debt capital comes very handy is in expanding the startup as you need more working capital or more shorter term finance that can flow back and hence get recycled into the company. Now, what today's announcement does is actually it provides an impetus to lower the cost of debt by providing a priority sector coverage to such debt investments. So there is at least a 2 to 3 percentage point difference that can come in once you factor the priority sector obligations and the incentives associated with that. And hopefully, as banks start to do more and more of this, debt capital to startups can start to come at a lower price point.
I want you to explain to the founders, startups, entrepreneurs that are tuning in at the moment, how does it help when the Reserve Bank of India identifies startups along with other sectors for priority sector lending? How does it get easier for them to access the debt option, and how does it become easier for a lender like yourself to actually lend?
So first, the impact on the startups, right? So normally, if startups are going to borrow from any bank or any platform like ours, they will have to undergo the regular financial scrutiny. But after that, startups being perceived as higher risk profile normally would get a higher price, higher interest burden compared to profitable businesses. Now, what this does is different classes of banks have different percentage of priority sector obligation, which is to say that a certain number of their advances must go to these sectors. Large banks might have that at 40%, small finance banks might have that at 75%. And startups are now a category that can contribute towards fulfilling that target. Now, if banks don't fulfill that target, then they're obligated to buy those assets from the market at a premium. And that is what drives the pricing of priority sector assets down, whereby banks have an incentive to lend to sectors that are covered under this scheme. So that is the benefit that will start to come to startups now. Interestingly enough, any lending that banks make to companies like Indifi or our NBFCs also get covered if we are onward lending to businesses that are covered under priority sector obligations. So it has the potential for us to partner with a bank and lend to startups at a lower price, given that we have built the expertise on how to lend to those startups and banks have the capital and the obligation around priority sector lending.
And these days, a loan to a startup, at what interest rate would it be? We all know that equity is very, very expensive, but just for my viewers to understand how it stacks up.
So, typically equity will get priced at 25% or more expected returns. And in case of a successful company, because one successful company pays back for 3 failures, that number may rank very, very high. But the reality is at that point, you need risk capital, and that is the price of risk capital. The debt capital to startups typically today is being offered anywhere from 18% to 22% annualized range. So it is more expensive than other categories of unsecured business loan, which may come at 13, 14, 15%. And what today's announcement does is it starts to provide an incentive for that pricing to come down to lower levels.
Alok Mittal, it's always a pleasure talking to you. I'm sure having you on the show today has really helped our viewers, the entrepreneurs, founders to figure out how to extend their cash way, what's an option for them. It's always a pleasure. Thank you so much for agreeing to do this interview.
Thank you for having me, Nayantara.
On the other side of this commercial break, Anand Mahindra. He's not sold on work from home being a permanent option, and he also thinks it's high time high net worth individuals help out startups.